Welcome, everybody. I'll start with my usual introduction to put this revolution in context. We were hunter-gatherers for several million years. We then transformed several 100,000 years into agriculturalists. 100 years ago, we found industrialization. 2 decades ago, or 4, we found the information age. And we are just getting into this new era called cognitive augmentation. Pretty fancy term. But it basically says that we're moving from passive tools. This was from a Stone Age discovery of a tool probably used to skin some animal that had been killed. But it takes us to pick up the chisel and the hammer and make something out of it. Today, we've got generative tools where the generative AI is going to be suggesting solutions to you. And in many cases, as Nick has taught us, the solutions are better than humans come up with, in the opinion of expert knowledge. So this is a brand new development in human history when we're going to be given opportunities to think about new solutions that don't come from a real human brain. Ray Kurzweil has been charting this for 80 years, and you'll see it looks a little bit like Moore's Law, but this is the price performance of computation starting back in World War II when the Enigma code was broken. And you'll see that that number is 0.00001 per computations per dollar. And we're up over 100 trillion now. And he expects that to continue to exponentiate. So as Nick never ceases to tell us, these things are improving at the rate of 100% every 3.5 months. Quite extraordinary. So Nick is with us today. He is my podcast partner from Los Gatos, a little bit south of San Francisco, living in a vast 15-acre estate, I'm sure, with all of his ill-gotten gains. And this is our 5th adventure together with all of you. And we've got the expert from San Francisco itself, Evan Epstein. This is a picture taken of him 15 years ago that he keeps putting up. And now he's got a bot of himself 15 years ago. But Evans is the one podcast I drop everything to see when it comes up. So please, take a look at his website, Boardroom Governance with Evan Epstein, and tune into that. He really is in the middle of all this stuff. And he started his earlier career. He's now at the University of California in San Francisco, but he started with Stanford. And he was the man who actually started governance for startups. So, Evan, we're thrilled to have you with us. I'm going to give you the stage. Anybody with any questions, please put them in chat and send them to Quinn. And we'll interrupt. Well, I'll ask Nick to interrupt Evan every 5 minutes, but it's tough to do that, Nick. So good luck. Evan Epstein, thank you for being here today. Over to you.
Thank you for the introduction. It's always good to see you, David and Nick, and I'm looking forward to our discussion. Should I just go in a presentation
mode?
Let's
go. Yeah,
okay,
go.
I thought Nick was going to give me another, but you already did the honors.
Evan, by the way, you haven't aged a day. I don't know what Professor Beatty is talking about. Looking sharp, my friend.
It's actually quite a recent picture, but okay. Yeah, look, AI is the hot thing in Silicon Valley in tech. You know, as David mentioned, I do a lot of corporate governance, and whenever there's something new and shiny, the question is, you know, does it impact governance in any way? And I think there are some really interesting developments that I'm going to show and we can explore. So let me do this short presentation on what I see happening over in Silicon Valley and any other places. So what's interesting is people are innovating in the corporate governance structure of things. So let me not go into the technology itself, but just let's talk about corporate governance. So clearly, this new wave of tech companies are raising a lot of money, doing many things. There are the hot VC-backed new crop of unicorns of companies. You can't read the newspaper without hearing about them, and they are really leading the way. And what's interesting is that they are innovating in some of the corporate structures that they have. In reality, it's not a widespread practice because the information, which is a news source here in Silicon Valley that tracks some of these things, showed that out of 96 US companies that are AI focused, 4 of them have these novel structures, whether a nonprofit, whether it's a benefit corporation or other type, pursuing social goals, right? So obviously we we've seen these public benefit corporations in the past. There was a bit of a surge, about these, but it was never in the cutting edge of companies. For the first time, we're seeing like the leading companies, the hottest startups using these structures. And that's very interesting. Now, you may notice that there's only 4 out of 96. Now, it may be updated at this stage to 6 out of 100. I don't know. These things change very quickly and every day. But what you will notice in Silicon Valley is that there is a power law. The most important thing that you have to understand about Silicon Valley, about venture capital, is the power law. Very few companies drive the returns of the whole industry. So in this case, it may be that the biggest, most important companies in AI are driving these outcomes. And it just happens to be that these are the ones that have these novel structures. I was talking to Joe Grunfist, professor at Stanford, and in my podcast, and he used a term I liked a lot. It's the AI pixie dust, right? This has happened a lot in the past with other technologies. .com, cloud computing, mobile. Remember, companies used to use all these phrases to kind of signal to be at the cutting edge. So now it's AI, right? And so the new thing I mentioned there, because that's a book that Michael Lewis wrote in 1999 about the .com boom. And so these things happen in cycles in Silicon Valley, and it just happens that AI is the new cycle. So the example exhibit number one is the one that I think the most important one, which is OpenAI, right? Which is the one that jump-started the generative AI ChatGPT technologies. November of 22 is when everything started happening. Now, interestingly, whether by design or whether by accident, they were structured as a nonprofit. Now, the history is kind of, I'm sure a lot of you know, but essentially they started this nonprofit as a way to hedge the power that Google and other leading big tech companies would have. And they said we should have a nonprofit to counter that power. And Elon Musk was part of that with Sam Altman and many others. And that's the origin. Now, it turns out that as they were growing and needed more money, they decided to raise money through a cap profit entity subsidiary. Very, very rarely seen, if ever, a capped profit entity. That means, David, if you invested in that company, they would give you a maximum of 100x your money, right? Still a great return. I'll sign for that, right? But they capped that, and the rest above that would go into the nonprofit. So first of all, it was a very strange structure, and it turns out it's a leading company. Now, others have used other structures. So Anthropic, which is kind of the other leading company, ex-OpenAI engineers, they founded this company as a public benefit corporation. Now, what does it mean to be a public benefit corporation? It means that in your charter, and it could be in different states, but in this case, it's Delaware, they incorporate a social purpose, a public benefit purpose, which in this case is for the benefit of humanity. Now, that's the biggest question that we have to ask. What does that mean? David and Nick, we can't agree on anything in this country in the United States, and you're going to tell me that we're going to agree what's good for humanity? Very, very hard to achieve that goal. And not only are they a public benefit corporation based in Delaware, but they have this long-term benefit trust, which is a second layer of innovation in terms of creating a trust where that trust will nominate directors into the board of the public benefit. And as the company achieves some goals, they will nominate more directors until achieving the majority of the board, right? Very, very novel. We'll talk a little bit about that. XAI is Musk's new company, also a public benefit corporation. He has a big tussle in Delaware. He's trying to move Tesla out of Delaware. That's a whole different topic. But he's saying, if you're a company, you should move out of Delaware. He wants to go to Texas, in this case, to Nevada. And they are announcing that he's raising a $6 billion round led by Sequoia at an $18 billion valuation. Big question mark as well is what's going on with AI at Tesla, right? So this is part of the discussion about his compensation. As you know, there's a $56 billion question about his compensation and whether he develops AI outside there are issues there in terms of taking corporate opportunities. That's another topic of discussion. The other company that I think is intriguing is Inflection AI. Inflection AI, was created, Mustafa Suleyman and Reid Hoffman, very well-known technologist in Silicon Valley, the founder of LinkedIn and early in PayPal. And they created this company, also a public benefit corporation. Reid Hoffman is a director at Microsoft. And recently, they just announced that they're going to acquire. They didn't announce an acquire, but Mustafa Suleyman was moving to Microsoft with 70 top employees. And so it wasn't considered a merger or an acquisition. And that's really interesting. We can talk a little bit more about that. Now, the big topic additionally here is what's going on in geopolitics. David, I'm sure people ask you all the time about China. In the United States, there's no bigger topic in governance circles than the geopolitical question. We just heard from President Biden on tariffs that go to 100%. This has been going on for a long time, thinking about supply chains. And so you also have to put the AI question in geopolitics. Do Chinese companies that are looking into AI also put these guardrails around the benefit of humanity? It's not clear that the leading Chinese engineers are thinking about this, right? So that's a big question mark. The second question mark is venture capital. Now, the people are projecting that there's going to be $80 billion invested in AI companies. That's about 20% to 80% of all VC investments are going to go into AI. It's the fastest growing category in venture capital. This should be no surprise. Now, what's more interesting, I think, is that we're seeing the biggest VCs, if we can call them, are the big tech companies. So Microsoft, Amazon, NVIDIA, Google are putting billions of dollars into these same companies. OpenAI, Anthropic, xAI, Inflection AI. They put $23 billion in these companies last year, 2023. This year, even more. There was just a report that they are spending not only in investing in new startups, but also in new data centers and new chips, $200 billion this year. If you multiply that in 5 years, they're going to spend $1 trillion. So it's a massive investment from all these companies. It's paid off also very handsomely in the stock market. We see Microsoft, trillions of dollars market cap. I mean, these companies are driving the S&P 500. If you haven't looked at the charts of the S&P 500, we're all-time records. And these magnificent seven are leading the way. Everyone is putting more money into AI as a signal to the market that this is the next thing. Okay, so that's the kind of the main topics. Another side question is the valuations. How do we think about valuations of tech companies, right? And so OpenAI is about $100 billion, and the latest tender offer where employees were part of, it was about $86 billion. That's a big number, very big number, leading unicorn in the country or in the world. Databricks is another company, not AI company, but $43 billion. CoreWeave just announced a new round, $1.1 billion round, $19 billion valuation, tripled in the last 5 months, right?
Wow.
They are creating data centers and they are all over the place. Anthropic, $18.4 billion, Amazon, big investor, $4 billion. xAI, they just announced this $18 billion valuation at a $6 billion round. They keep announcing it, but I'm not sure it's completely confirmed. Scale AI just announced yesterday a $1.1 billion round led by Accel. And in all these rounds, by the way, you have the big tech. So that's $14 billion in Scale AI. Mistral, the French company, kind of the French champion of Europe, $6 billion valuation, $600 million round from some big VC firms. Cohere, your Canadian company, right? They're saying it's about $5 billion. There's a $500 million round. Hugging Face, 4.5. Inflection AI had a valuation of $4 billion, but this non-acquisition was acquired under the preference stack, meaning just over the money of the investors. That was about $1.3 billion, right? There's a lot of question marks around that one that I don't think people know because we are not privy to the details of that transaction. So let's talk about OpenAI's board fiasco. But let me stop a little bit and see if there are questions there. Happy to discuss at any stage any of the things I've mentioned.
Yeah, can I ask a basic question, Evan?
Yeah.
Is this another bubble, or is this stuff really real?
Hey, that's a great question. I would say, and it's hard to make definitive statements, but for sure, we're going to see many frauds, overvaluations, and people are going to lose many shirts over this because everybody is claiming to be AI. Look, the SEC is already enforcing actions against companies for claiming to be AI, right? This is greenwashing. This is AI washing, right?
Yeah.
So this is going to be a new trend of there's too much money in the market. There's too many people that are chasing this opportunity. Clearly, there's going to be some big winners, but you can rest assured that a big part of all these people are going to go to zero. So that's my prediction on that respect.
And then it takes to your power law, does it, Evan? It goes back to the Magnificent Seven are going to take 99% of the valuation.
I think that's a huge question because I'll tell you why it's a big question. Whether the big tech companies are going to own the space and the velocity in which they escape is just too much, which is originally what Elon Musk wanted to avoid. How do you avoid having companies that are closed source, that have the technology, and that have too much compute power, and you can't catch up, right? So the question is, in the future, are we going to have these overlord big tech companies, or are you going to allow new startups to innovate and come into the fore? And that's a big battlefield today in terms of regulation. Antitrust is a huge issue where FTC, where the DOJ, the European regulators are looking into this. I think that's an open debate and a very interesting one.
Great.
Hey, Evan, we've got a question from Greg. It's a really interesting question, especially, based on some of the recent comments by Elon Musk. Given the explosive growth of AI and the huge demand for electricity, right? Can you comment on the potential electricity power needed and its implications?
I think that's an enormous question. The investments that are going on. I just read the other day, Google put $1 billion or €1 billion in a new data center in Finland. And so, remember, there was all this discussion around data and energy compute on Bitcoin and on crypto, but it turns out that the energy required for these data centers and these compute of AI is even bigger. So I think that's another big question. People are thinking about reinvigorating the nuclear power industry to do this. I think Mark Zuckerberg mentioned in one of his podcasts that he would happily, have a nuclear plant or something of the sort, because that's the limiting factor of AI is going to be how much computing power you have. So I think people in energy sector, this is a big topic, and I think it's going to be hand in hand with any other development happening in the sector.
Yeah, Evan, let me chime in as well. For those of you who don't know me, I worked at Google for 11 years, and Google was one of the world's largest consumer of electricity. And that was before this big burst of AI, which is much more power hungry than traditional search, if you will. Some conversations I've had recently suggest that the limiting factor for AI growth is partly compute, but it looks like it's going to get solved. But then, we're going to hit some limits on electricity. So the gating factor for, getting to computers who are as smart as humans is likely to be power as opposed to compute. And then the second point I wanted to make is Google actually used AI, and my goodness, now almost like 8 years ago. There used to be a bunch of humans in data centers that would turn knobs on and off to cool these computers. And it was all done manually. And then when we put an AI in charge of doing this, the demand, the electricity in that data center went down by 40%. So there's a bit of a circular argument, but AI can actually make AI less power hungry going forward, which is interesting.
Yeah, I mean, I think there's so many good questions that are going to come up with all these massive investments. I mean, we're talking about trillions of dollars at the end of the day if you add them all up, and the R&D spend of the big tech is bigger than governments by orders of magnitude. So it's really interesting to see how this goes. All right, so let's talk about the OpenAI's board fiasco. Many of you may have followed this story, and I think from a governance perspective, it's a fascinating story because it almost imploded a company almost from the cradle, right? As I mentioned, it has a nonprofit structure that controls this for-profit capped entity, and they say that their primary fiduciary duty is to humanity. I still don't know how to reconcile that with the law, right? If you go to Delaware or any state law, you got a duty to shareholders, and that's been settled. And how you think about the stakeholder duties, that's also part of what you have to think about. But now we have this new standard that nobody knows what that means. So November 17th, and I think Sam Altman just came up in a podcast recently where he revisited this story. Turns out he was in Las Vegas for a conference. He gets a call from the board and they tell him, look, you fired. That was a Friday, and it was on a Teams call, and he basically didn't know what to do. 5 days of complete chaos ensued. The reason given was a vote of no confidence. Essentially, the board said, they issued a statement and they said he is not candid in his communications, but it's a little bit cryptic. But, remember, if you are in corporate governance, the core duty of a board is to hire and fire the CEO. They have the ability or the right to do it. I mean, that's not in question. And so then the Silicon Valley insiders are claiming this is the biggest board coup or ouster since Steve Jobs' firing in 1985, right? Like, this is a big event that, like, what's going on here? Who are these people that are firing him? And of course, it's like a nonprofit. So are these the right people? Do they understand what's going on? There's pressure from investors, tech leaders, employees. Now, I think the employee side is a very important part of this story, because I mentioned the tender offer. There was a tender offer going to happen. There were work on this tender offer where employees were going to tender at a massive valuation. So every one of those employees could potentially make millions of dollars. They didn't want that to be in jeopardy. And they said, no way, we're going to keep, Sam Altman as CEO, and we don't want that to happen. So what happened? Interim CEOs got named. I think 2 interim CEOs got named in this moment. Microsoft hired Altman and Brockman, made an open offer to anybody from OpenAI to go work for them. And 90+% of the employees signed a resignation letter and told the board, you either resign or we all are going to walk to Microsoft. Essentially, the company, by a cost of zero, was going to go to Microsoft, and that was a genius move by Satya Nadella, who showed incredible chops in pressure. He almost acquired OpenAI at a cost of zero, and essentially, what do you think? We can put an asterisk to that, because that's essentially what he did with Inflection AI as he learned from OpenAI, right? But we'll get there. So by Tuesday, 5 days later, Altman returns as CEO, and all the board members resigned except for one who remained. And it's interesting how he remained. Must be a very strong personality. It'd be interesting to see his role. Adam D'Angelo, I think the CEO of Quora, was the one that remained. They bring in Brett Taylor, a very well-known technologist, former chair of Twitter, former executive at Facebook, at Salesforce, co-CEO of Salesforce, and Larry Summers, who's very well known as ex-former Treasury Secretary of the United States, president of Harvard. I mean, that's establishment core. And I think this was a massive call for corporate governance, for better governance in Silicon Valley. I mean, you can't get a bigger story in terms of, doesn't matter, David, I'm sure you get this all the time, but people, well, does the board matter? And particularly in startups, people say, who cares about this stuff? Well, this is why it matters. It's when the proverbial SHIT hits the fan, governance really matters, right? Yep. So this, I think, was a wake-up call. And so what are the reforms that they said at the time? Well, they're going to expand the board with qualified, diverse members. They're going to give a non-voting observer seat for Microsoft. Just so you know, Microsoft had put $10 billion in this company, had no say from a governance perspective. They had no board seat, they had no observer right, they had nothing. Satya Nadella heard about this stuff in the media the same way you and I heard about this stuff, right? And then they convened an independent committee of the board to oversee a review and investigation of the events, okay? Mm-hmm. Well, recently what happened is on March 8th, OpenAI announced some of the latest reforms, and the investigation is over. What are they doing? They're bringing new directors, so very respected directors. Sue Desmond-Hellmann, former president of UCSF. She was the CEO of the Bill Gates Foundation. I guess now it's the Gates Foundation. Nicole Seligman and Fidji Simo from Instacart. They are creating new corporate governance guidelines, conflict of interest policies, whistleblower hotlines, and board committees to establish the mission and strategy committee, right? Because the mission of OpenAI is very important because they have this benefit or nonprofit entity, right? So it's important to have that. Now, Wilmer Hill, which is a very respected law firm in Washington, D.C., did this investigation, and they say there was a breakdown in trust, but the CEO's conduct did not mandate removal. Essentially, they approved Sam Altman and said, no fault, it was fine. There was a breakdown in trust, but Sam Altman, should have remained and did not mandate removal. Essentially, carte blanche for Sam Altman to return as CEO and to the board. So Sam Altman is back on the board. In the meantime, Elon Musk sues Sam Altman, Greg Brockman, and OpenAI in San Francisco Superior Court, saying, how is this even possible? OpenAI was started as a nonprofit to develop this company or this technology for the benefit of humanity, for the benefit of humanity, and not for a for-profit company seeking to maximize shareholder profits and to do it open source. And so essentially what's happened is it's the exact opposite of its creation. Now it's become, maximally closed, owned by Microsoft, and, keeping its closed source, right? They defended themselves. Sam Altman and Brockman and OpenAI sent a blog open saying, hey, Elon, you want to take control of OpenAI. You want to be the president. You want to be a chair. You want to be CEO. So the story is, it's still being litigated in San Francisco. One lesson here is if you're the board and you strike at the king, you better kill the king, right? And Sam Altman is stronger than ever, is the CEO, is in the board, controls this thing. And so it was a bad coup if ever there was a coup. But the role of employees, I think, was really fascinating because that turned the tables, right? Essentially, everybody was going to walk over and the company was going to be worth zero.
Yeah.
Okay, we can, unless there are questions about OpenAI, we can turn into Anthropic, which is this long-term benefit trust, another very interesting situation. So what you have here is a company that says, look, we take safety very, very, with a lot of attention. And essentially, we believe that safety is core to developing AI. And our company is going to have a new charter that's going to say the responsible development and maintenance of advanced AI for the long-term benefit of humanity. Again, this is sorry, I'm just doing here. This is the mantra of all these companies, right? And they want to create, they acknowledge that AI may create unprecedentedly large externalities, which they name, national security risks, large-scale economic disruptions, fundamental threats to humanity, but also enormous benefits to human safety and health. So this is why they created this as a public benefit corporation. And so they added at the Series C, when the company, in venture capital, you have a Series A, Series B, Series C. In the Series C, they added this new layer of shareholders to have a long-term benefit trust. And essentially, this long-term benefit trust is an independent trust of 5 financially disinterested members with expertise in AI safety, national security, public policy, and social enterprise to serve one-year terms. Essentially, because they have different interests to the interest of the company, right? That's how they are thinking about it. And they created this Class T common stock, and those shares are held by the trustees of the trust, and they granted trustees the power to elect gradually increasing number of company directors upon passage of time and fundraising milestones. And so, the trust will elect the majority of the board within 4 years. That's what they said. But they added protective provisions that require a trust to receive notice of certain actions that could significantly alter the company. And also, they added fail-safe provisions that allow changes to the trust and its powers without the consent of the trustees if sufficiently large supermajorities of the stockholders agree. So they hedged it, right? They said, look, we're doing this, but hey, if something crazy happens, we are going to supersede the trust. I don't know how this is going to play out, right? It's very interesting from a governance perspective. It almost killed OpenAI. We'll see how it works out for Anthropic. And, I know the people behind the design of this structure, very respected academics and lawyers and law firms, but, it's still an experiment. The two others that I believe are very interesting by themselves are XAI and Inflection AI. XAI is Elon Musk's public benefit corporation, Nevada, also using this public benefit or benefit of humanity reasoning to create a material positive impact on society and the environment taken as a whole. David, do you this is just like a great statement of intent. Beautiful,
Yep.
right? Beautiful. They originally raised $135 million through 4 investors. Now, as I mentioned, raising $6 billion and $18 billion led by Sequoia. Somewhere, people also said that 25% of this company was owned by X. You may remember, or you may know, that the AI Grok is used in X, so it uses the data from X, so that's owned 100% by Elon Musk. Talk about having a range of companies at your disposal. Famously, I don't know if you read Elon Musk's biography by Walter Isaacson, but he moves engineers and people from one company to the other, SpaceX to Tesla to Boring Company, Neuralink, and so he's got now X, and now he's got XAI. I think it's very interesting on the governance front for that perspective. And then you have here Inflection AI, I think, is another big one, another public benefit corporation with a purpose to develop products and technologies that harness the power of AI to improve human well-being and productivity whilst respecting individual freedoms, working for the common good, and ensuring our products widely benefit current and future generations. It's like a competition, David, of how much nicer can you create the treatment of your humanity, right? Maybe the same AI, drafted this, but who knows? I think here, what's interesting is Mustafa Suleyman, the founder and CEO, he announces his departure to Microsoft along with his co-founder and 70 other staff members. So I don't know about you guys, but when you start a company and you raise money, the bet is to maximize the value of that company because that's what the investors want.
Yeah.
The investors are not there for a little return. The investors are there because they want you to swing for the fences. They want 10x, 100x, 1000x, right? So the fact that he moves to Microsoft and walks away is very strange. It's an anomaly in the venture. So people, what happened here? What's the backstory here? Well, it turns out that Microsoft paid $650 million for a licensing fee, plus $30 million to waive legal rights for mass hiring, and then renegotiated $140 million for a line of credit that it had provided, right? Okay, that's interesting. The company had raised 2 rounds, $1.5 billion, and most of it in its last round, 1.3. And the Series A, it was Greylock and Dragoneer. Important to say that Greylock is the firm where Reid Hoffman was a partner, or is a partner.
Right.
And Reid Hoffman is a director of Microsoft as well, right? And he was a co-founder of this company too. He's not only just an investor, I think he was a co-founder. He was very involved, he's very much into AI. So they will receive 1.x. Now, this is not the return that they are looking for, but they get their money back, right? Plus some. And then at the Series B, which was Reid Hoffman, Bill Gates, Eric Schmidt, NVIDIA, Microsoft, they put 1.3 billion, they received 1.x. So they receive their money back, right? So essentially it's like, look, we're not going to make it. Here's your money and some. And then you get some rights because it's not like the company is folding. There's a new CEO. And so it's interesting to see how that evolves. The big question mark is Microsoft acquires this company for a little bit over the preference stack, let's call it 1.6 billion. It was valued at 4 billion for zero. And now, there's a big question mark on how Microsoft and other big tech companies can make acquisitions. I don't know about you guys, David and Nick, but one of the thoughts behind this idea of so much money going from big tech to AI is that they can't acquire companies. So they've got to spend this money. So it's a great idea to look, if we can't buy companies, let's spend companies. Let's spend our cash to build, data centers, to build, other, technologies and more developed chips. And so it's interesting to see how that is evolving. And, there's a great, as I mentioned there, is it a backdoor acquisition? What's going to happen with the antitrust scrutiny? Was it an acqui-hire, right? There's a lot of questions, more questions than answers. And I love this quote from Bill Coffran from Sequoia. Basically says, engineering is easy and people are hard. We go back to basics with governance, right? It's people that matter. And the fact that you have AI doesn't solve the age-old problems of governance. This is why Elon Musk is fighting Sam Altman in a lawsuit, right? This is why you have all these are the classic battles of governance that have always existed and I think will keep existing, and it's part of the governance story. So that's what I have for you guys, and I'm happy to talk about all the other stuff that we want, but it's fascinating, it's ongoing. The news this week, for example, is that some of the OpenAI employees that are leaving because they're saying, hey, this company is not really looking out for the security or benefit of humanity. And there was a clawback, and they were trying to take away their vested equity. Sam Altman goes out and said, "Oh, I'm sorry. I didn't look at the terms of the contract, and we're gonna take away that, right?" Okay, strange that was the case. And then there's also the story with none other than Scarlett Johansson, right? And she's the famous actress that impersonated Sky, right? Sorry, Sky is the one from OpenAI, but impersonated her in the movie. Apparently, there was a negotiation between Scarlett Johansson and OpenAI to be officially the voice. She said she declined. When ChatGPT 4.0 comes out, the voice is very similar to hers, and she issues a statement saying, "What the F, guys? How can you do this?" And this goes back to trust. This goes back to trust, right? It puts a cloud in what is going on here. How do you operate? And flirting with pushing regulations, flirting with pushing the boundaries. I suppose that's part of the whole story, but we're going to keep having stories. And I think because it's the biggest investment and technology shift that we're seeing, there's going to be a lot. And you bet, David, that governance is going to be implicated here. And we're going to see more lawsuits. We're going to see more fights. There's a lot of money at bay. There's a lot of discussions, but really interesting. And I think the X factor is this whole public benefit corporation stuff, this whole nonprofit. I mean, that's unheard of. And we're going to have to put attorney generals of California, of Delaware, because that's who, can enforce fiduciary duties in a nonprofit, for example. So how are they going to deal, for example, with nonprofit rules of tax issues? I don't know. Those are all questions that we can have.
Well, so Evan, on that point, it's a great question from Raza, which is giving the long-term benefit of humanity is really subjective and can lead to lawsuits. If you're on the board of one of these public benefit companies or nonprofits, and how do you discharge your responsibilities? Question number one. And number two, if you're a company that's a for-profit company like Microsoft and you invest in one of these, nonprofits, you also expose yourselves to collateral lawsuits.
It's a great question. So much easier to respond to the classic for-profit entity because we know how that works, right? If you're on the board of a for-profit entity, you have a fiduciary duty to maximize the value of the company for the long term. That usually means shareholders, but you have a lot of leeway in terms of thinking about stakeholders and employees and other issues, right? So that's a very classic. There's a business judgment rule. It's going to protect you in a very big way, unless there are conflicts, unless there's something that is going on. The nonprofit side is much less clear. There hasn't been litigation, to my knowledge, or there's been very limited litigation against public benefit corporations for directors breaching fiduciary duties to that public benefit, because they can say, look, we have a benefit to humanity. What does that mean? Never been tested, right? I think the episode with OpenAI is very interesting because that's the claim that those directors had. It's like, look, we have a fiduciary duty to humanity. We believe that the direction the company is going is not right. We don't think Sam Altman has been candid with his conversations. We don't think he's the right person to lead it. We're going to fire him. Okay, that's what they are giving priority. But there is a whole business side to this, right? So how you reconcile these two issues is going to be very big. And you can, the same is going to happen with these new crops of companies with, Inflection AI is, I suppose, part of Microsoft now, but you have Anthropic and XAI. I think those are open questions, harder to reconcile. At some level, you have more leeway as a director of a public benefit corporation because your accountability is less straightforward. You can kind of say, yeah, I'm doing it because I think this is good for humanity and my charter allows me to do this, right? So it may be a cop-out, right? It may be like dual class shares on steroids. Hey, founders, we have a new model, not only dual class shares, but now we are public benefit corporations, and you invested in our company knowing that. Thank you.
I'm going to ask a question that may be controversial, but just to kind of push our thinking a little bit, I want to ask it. But isn't, what you're saying now kind of a bit of what the way to think about it if ESG was taking to its ultimate kind of maximum, right? Like that. This is if a CEO is being evaluated for 10% ESG, for example, and her scorecard, this is a CEO is evaluated at 100%, for ESG, and therefore, what does that mean for ESG? Is ESG too vague, and do we need to quantify ESG a little bit better? So, and Greg has a question here, which is, yeah, from a governance perspective, how do you board members of these broad and loose humanitarian objectives measure CEO performance? And so, how do we measure ESG, whether it's 10% or 100% of a CEO's goal?
Yeah, that was interesting. I think Lucian Bebchuk was responding to that when you had the Business Roundtable group signing up for there's more to the company than just looking after the shareholder. And he said, so what are you going to do? Profits are dropped by 50%, but you saved 2 lives in Ethiopia. And the CEO say, hey, I win. Give me my bonus. I've saved 2 lives in Ethiopia. I said, okay. How do you in fact hold people accountable? He just said it was too complicated. You could never do it. I think that's where the Harvard laws ended up, but I'm not sure if that's really right.
Well, look, I think this is a big debate in governance circles. This is the stakeholder debate that's been enraging since 2019, where the Business Roundtable came out and said that the mission of corporations is not to maximize only for shareholders, but for stakeholders, right? So big call for other constituents, the community, the environment, the supply chain, customers. And so the question is, well, do you actually need a public benefit corporation? I had a podcast episode with the lawyers from Wilson Sonsini, and I had a litigator there, and she's like, look, you can actually do all these things in a corporation, right? You don't need to do public benefit corporation it makes it clearer because you've got a charter, but in practice, you could, 99% of all the companies are for profit. Now, it's interesting because there's a parallel wave. There are now 20 companies that are publicly traded that are public benefit corporations. Just so you know, in Delaware, the charter only started, I think, 2014. So it's only been 10 years since Delaware has public benefit corporations. So it's a fairly new addition to the landscape. And I think that it's interesting that the first time that we have a wave of the new companies are using this. Like, we didn't see this in Google. What's interesting is Google prompted something different. Google prompted the dual class share structure, right? And they were the first tech company to use a dual class share structure. And then everybody else said, this is great. We've got more votes per share and, everybody else. But maybe this generation is prompting public benefit corporations. Still very much an open question. Still very much an open question whether VCs will invest in you if you have that. Again, because it's a power law, if you are Sam Altman, you may command it. If you are Mustafa Suleyman, you may command it. But not every entrepreneur is going to be, saying to investors, it's kind of a market. It's the same thing with dual class shares, right? Not every tech company can have dual class shares, right? I think the statistic is, let's call it 20% of top companies have that. And of those, what's interesting is the ones that go public, about 45% of them use dual class share structures.
Yeah.
But again, here, we are talking about the very extreme. We're talking about the very few companies that have this. So I don't want to overstate the importance in the overall market, because for most people, this is not going to be an issue unless you are Anthropic or one of these big companies.
No, it's funny, Evan. I asked ChatGPT just now, what are the benefits of a public benefit corporation? And it listed a number of them, but the two that really stood out were, and I don't know if this is accurate because ChatGPT can just make stuff up, but it said that there was a legal benefit for directors. You're more shielded from lawsuits if you choose not to maximize profitability, which I found interesting. But it said the number one benefit was to attract talent, young talent. They're really drawn to these kinds of companies.
Yeah, I think that's correct. I mean, you know B Corps, right? There's a company called B Corp that essentially tried to was a big lobbyist to have states pass public benefit charters. So one thing is to be a B Corp, which is a private company giving you a certification that you are a B corporation. And there's another thing to incorporate as a public benefit corporation and states. These are two different matters, but part of those reasons are to attract millennials, attract the new generation that don't only want to go to a company to make profits, but think that there is other matters like the environment, like social issues that are important.
We get another question, Evan, kind of changing tack a little bit, and it's more about the technology. These technologies go in waves, and typically, there's a big investment boom, and then there's some consolidation and commoditization. So what's, as you think about these large foundational models, what's your take on where these things are going?
Yeah, look, I mean, I'm no expert on the technology itself, and things are moving so fast. You obviously have used Perplexity, right? And so a question is, for example, on the consumer side, who's going to own the consumers? And then you have, Microsoft and Google that come out with these incredible consumer-facing apps, and suddenly you have a company like Perplexity that maybe is a $2-3 billion company that's raised, but are they going to be able to compete, right? So I think the whole battle is going to be very intense, and how people develop these technologies is going to be really important, and it's all being shaken on a daily basis, and I wouldn't be able to predict which one is going to be the winner, but this is where people are putting a lot of bets, and I suppose there is the parallel regulatory threat on what happens with regulations, and we've talked about it on how people see it in the United States, how people see it in Europe. And I think that's also can change how these technologies are adapted, are used. And I think the US is a little bit more regulatory light in means of trying to, come up with new solutions. But look, Silicon Valley is about startups and it's about companies. I don't know if you know him, but there's a professor at the Stanford GSP called Ilya Striblayev, who just wrote this book called Venture Mindset, where he describes, the startup and venture capital mindset. And it's always taking these bets for new companies. And I think that model has worked 50 years in Silicon Valley, and it should keep working. And so it may be outliers, right? We may see, these companies, Nick, have 2 years in the market, and they're billion-dollar companies. I mean, it's
crazy, yeah. Yeah, I'll share a couple of thoughts as well. I mean, for those of you who've seen ChatGPT 4.0, which just came out, I mean, it's free, right? So I mean, these models are basically, they're gonna cost.
I'm paying for the $20 for the 4, so now
you don't have to anymore, right? So I mean, they're making free to the consumer. The price to call the API from a company perspective has dropped by 50%. So basically, these models are going to commoditize like crazy, and they're going to be free or nearly free for companies to use, which is amazing. So that's coming, right? ARK Invest, suggests that the price of these models will go down by 86% a year, which basically is free, 3-4 years from now. And then the second thing, I think the battle that's really being waged right now is not a battle of OpenAI versus Microsoft in terms of large language models, versus Google. We're going into the world of agents. So for those of you who haven't used, like the GPTs inside ChatGPT, for example, you can set up, agents on like Expedia or Kayak. And you can today, like this works today, you can ask Expedia to book you, a 2-week trip to Europe and to like find the flights and the hotels for you based on your likes and dislikes. It'll do all the work for you like automatically. So we're going to the world now where, as opposed to typing prompts and asking AI to do stuff for us, we're just going to ask it, what we want, and it's going to do the bulk of the work. So imagine, just like in the movie Her, if you haven't seen the movie, you have to watch the movie. In the movie Her, your AI agent is going to call thousands of other AI agents. So the battle isn't who's going to have the best large language model. I think the battle is who's going to have the most developers write, other applications on top of your own AI. So this is why Google announced, its agent framework just last week, and this is why OpenAI is making everything free and then trying to get developers too. So we're going to have one large AI company, maybe two of them, and then there'll be tens of thousands of specialized AI companies. But whoever controls a large AI company, whether it's Microsoft, Google, or OpenAI or Elon Musk, is going to be a multi-trillion-dollar market cap company. But there's only likely going to be one or two. And then with the regulatory capture strategy they're also employing, it's going to be hard for new startups to come in now.
Let me point out another big trend for everyone, which is private companies, private markets. None of these companies are public. So it's not like you can go and invest in shares of OpenAI. I suppose your big proxy is Microsoft, and that's why Microsoft is such a big appreciation in its stock price. But we are seeing these tender offers. And so it's interesting how that development is going, where these employees may be able to sell as a private company and become millionaires. And there are all these different secondary markets where people are pitching, hey, you want to own stock in private shares. And there was a great story in the New York Times by Aaron Griffith about a new company, an ETF that was listing itself with 37 private company stocks. And the valuation was like $1 billion when the stock was worth like, I don't know, 50 million, like insane delta. I think that the price has gone down, but there's a lot of developments in that. People thinking, well, should we go public or not? Can we stay private? And because of the mania of investment, there's no lack of funding for these companies. And so I think that's another thing to be tracking is private markets and how this all evolves. Traditionally, the biggest companies were public and you could buy Amazon and all these, but now that's a different world.
Yeah, thanks, Evan. Well, listen, thanks, everybody. I think we're at time, right? Quinn, if you want to close us, that would be fantastic.
Excellent. Thank you very much, Evan. Evans, on behalf of the attendees, grateful for your time. Where and how can people engage with you?
Yeah, great. So boardroom-governance.com is the podcast. You can go out there and there's 136 episodes. My newsletter is also something that people enjoy. I have 52 newsletters plus editions where I write about this stuff. evanepstein.substack.com. And, I am also a professor at UC Law SF. If you want to send me an email, you can find me there, epsteinevan@uclawsf.edu. Happy to talk to anybody. And, governance, I think, is a great topic. So happy to entertain any questions that people may have.
Excellent. Yes, you put out a lot of content in the form of long-form podcasts, as well as Substack newsletters and research papers, all the way to approachable stuff for busy executives. And David always talks about your podcast.
Yeah, it's the one, I'll reiterate, it's the one podcast, no matter what I'm doing, I drop doing it and say, I've got to listen to what Evan's got hot now. So please sign up for it. It's a great, great, great podcast. Thanks, Evan.
David and I go way back when we had the Stanford Rotman program on governance back in the day, right, David? It was great.
It's a little bit, yeah, a little bit back in the Stone Ages, I think.
And the AI Tsunami podcast or webinar series is a monthly webinar put on by Nicholas Darvagarno and David. And this month was very specifically in Silicon Valley with Evan specifically talking about board governance. What's coming up next? The next event is with very well-versed practitioner, Neil Cause, the CEO of Geotab. Geotab's a massive data-first business. It's been in business for 20 years. Neil is the founder, and if we want to learn from someone who has been riding the Digital Tsunami. He's an excellent person to hear from. He's grown his company to 2,000 employees, 700 partners, and I just looked on the website, 75 billion data points daily from 50,000 customers.
Yeah.
He will have a lot of interesting things to say about generative AI. Other infomercials here. So really want to point out Nicholas is the resident marketing expert, having been the chief evangelist for Google and Google Search. He has a very intimate class that he is running weekly from July 9th to August 15th. Who better to hear from someone also riding the marketing digital tsunami than Nicholas? And as always, David, follow along David's LinkedIn, his newsletter, and all of this information will be in the follow-up over the next little bit.
Right.
And thanks a lot, everybody, and see you next June 16th.
Thank you, everyone.
Yeah. Update your photograph.
Bye.
All right. Bye.
Thanks, everybody. Bye-bye.